Hi everyone, welcome to the CA classroom. Today we will be discussing the chapter Accounting from Incomplete Records. What is this? Books of accounts might be incomplete for various reasons and we have to complete the same by finding out the missing values. What do you mean by this? Books of accounts can be kept incomplete either by choice or because of any uncertain event. Let us take two examples to understand this. Example number 1. Let us look at the tea shop near your house. Now the tea shop might have one owner and at max 2 to 3 employees. What are his transactions? He will have a few purchases like purchase of milk, biscuits, sugar. His sale will be sale of tea to customers. And he'll operate in the morning for a few hours and evening in the few hours, or some tea shops operate for the entire day. Now, if I go to this tea shop and ask him to give me his profit and loss account and balance sheet, will he have a profit and loss account and balance sheet? Absolutely not. All he'll have is a small notebook where he'll maintain all his receipts, what all cash he has received and what is the expense he has, and he will have the balance of cash in hand. Additionally, he might also have a notebook for maintaining receivables and payables. What will be his receivables and payables? Some customers might tell, we will pay in the next week or we will pay in the next month, and he might have some dues payable to his suppliers. This is the maximum amount of accounts that a small tea shop will maintain. Using this available receivable and payables and few receipts and expenses, can you prepare profit and loss account and balance sheet? Is the first question. Let us look at the second example. Let us take a full-fledged textile showroom. Let us take a textile showroom and let us say there is a textile showroom where they are maintaining proper books of accounts, where they have a server, they have proper books of accounts, and on any given day they can prepare P&L and balance sheet. Now let us say because of any uncertain event, what kind of uncertain event? Because of fire, or let's say theft, or because of any issue in the servers, if the data, if the amount of details they have in books of accounts are destroyed, then with the available information, how do you prepare the P&L and balance sheet? Now this is the background as to why there is incomplete records. Why will I prepare a P&L and balance sheet over here? Let's say the turnover of this tea shop is very heavy, that there is an income tax rate on this tea shop to pay tax. There are some small shops near your houses where the turnover of these shops is more than what you can imagine. Now, anybody can come to a chartered accountant and ask them to prepare full books of accounts with the little information they have. Now, it is your duty to prepare such books of accounts. Now, why do students find this chapter difficult? It is because their basics are weak, meaning you need to be very good in understanding every account in and out. Now, let us look at the different types of incomplete records. Incomplete record is also known as single entry. In the previous section, we had seen the background for incomplete records. Now we are going to see different types of single entries. The first one is a pure single entry where the person maintains only personal accounts. What are personal accounts? Ram account, Lakshman account, etc. Why do I maintain only personal accounts? All my cash receipts and cash payments I have a track. Personal account, for any receivables and payments, I maintain something called only personal accounts. Second type is something where he maintains personal accounts plus cash book. So a typical example is the tea shop example where he maintains a cash book of all his receipts and payments and another personal account to record all his receivables and payables. The third type is a quasi single entry where they maintain personal accounts plus cash book plus other subsidiary books. What are the other subsidiary books? Subsidiary books can be your sales book, purchase book, expense accounts, etc. These are different single entries classified based on the level of information available. Now what should we do? Based on the type of single entry, we will try to combine the available information and prepare a full-fledged books of account. In the previous section, we had seen the different types of single entry. Now we are going to see the first type of problem in your single entry chapter. The first type is, let us assume a typical balance sheet which has share capital over here, liabilities here and assets on the right hand side. Let us say share capital is missing, and if I give you details of assets and liabilities, can you find out the share capital? This is your first type, where out of the three, any two will be given and you will be asked to find the third one. For this, we prepare a small statement. First, you will plot down all the assets and write down their values. Second, you will plot down all the liabilities and write down their values. And third, you will write missing figure as capital and write down the amount. Now, if details of assets and liabilities are given at the beginning of the year, my capital will be opening capital. And details of assets and liabilities are given at the end of the year, my capital will be my closing capital. Based on the available information, my statement format will change to find the missing value. Now, the most important thing in this chapter is to understand structure of the accounts, and hence let us look at the structure of various accounts in this chapter. In the previous section, we had seen a format for statement of affairs. Now let us look at the template of how a capital account will look, being this the debit side and the credit side. Opening balance will always come on the credit side of the capital account, and closing balance will always come on the debit side of my capital account. Let us say, if a partner introduces additional capital during the year, additional capital introduced will come on the credit side of my capital account. Any money withdrawn, known as drawings, will come on my debit side of my capital account. Loss for the year will come on my debit side. Profit earned during the year will come on my credit side. These are the typical transactions that fall in my capital account for the year. Out of these 6, they might give any 5 or 4 and ask you to find the other one. We might have only loss or only profit for a year. Obviously, you cannot have both. So, they might give you opening balance, they might give you additional capital introduced, they might give you closing balance, and they might ask you to find out the drawings for the year. To be able to do this easily, the structure should run in your head very easily. In the previous section, we had discussed the format of capital account. Now let's quickly run through the typical format of debtors account and bills receivable accounts. Opening balance in a debtors account comes on the debit side, and for a bills receivable account also opening balance comes on the debit side. Closing balance comes on the credit side, and similarly for a bills receivable account, closing balance comes on the debit side. When a party makes a credit sale comes on my debit side, and when the party makes payment for the sale, the payment will come on the credit side of my debtors account. Next, let us say I am converting my debtors to a bills receivable. Then my debtors balance will decrease and my bills receivable balance will increase. Hence, I will write by bills receivable and to debtors. If you feel the debtor might not make the payment, you will create a provision for the debtor. The debtor will, provision entry will be by provision for bad and doubtful debts. Remember, whenever the debtor payment, what he has to pay, the amount increases, my debit side will increase. If the amount of payable dues from my debtor is going to fall for any reason, then I will credit my debtor account. For a bills receivable account, whenever my party makes a payment, I will credit by bank. Now, In these transactions, they will give you details for most of this, and one or two might be missing, and you have to find those items. Let us say debtor has not made the payment and you are recording accrual entry for interest. Where will that come? Debtor has to make payment to me, hence I will debit my debtor with interest and increase the due receivable from my debtor. Now let us look at the structure for creditors account and bills payable account. In the previous section, we had discussed between debtors and bills receivable account. Now let us see the general structure for creditors and bills payable account. Opening balances come on the credit side for these accounts and closing balances come on the debit side for these accounts. Any credit purchases made will come on my credit side for the creditors account. And any payment made to my creditors will come on the debit side. Now, for my creditors, if I am going to convert it to a bills payable, then I will debit my creditors account to bills payable, and in my bills payable account, I will write by creditors account. Basically, what is happening? My due, I am transferring the amount payable from creditors account to bills payable. So I reduce the due here and increase the due over here. When the person makes the payment for the bill, I will debit to bank account. Now, let's say debtor is settling my creditor. Let's say X Limited is my company. My debtor is making a direct payment to the creditor. So what happens to the creditor account? It will be debited as two debtors, and in my debtor account, in the credit side of my debtor account, I will credit by creditors account. So this is the structure of your normal creditors account and the bills payable account. There will be some more transactions like sales return, purchase return. Let's say purchase return. You are crediting for purchases. Therefore, for purchase return, you will write two purchases return. Purchase return will come here only if it is a purchase return for a credit purchase. However, if it is a purchase return for a cash purchase, then such an entry will be accounted in the purchases account. Similarly, for debtors, if there is going to be a sales return from a credit sale, you will account in the debtors account. If there is going to be a sales return from the cash sales, you will debit your sales account. Now, these are only few template accounts which you should know. End of the day, how to solve a problem, sir? In the previous section, we had discussed about structure of various accounts. These structures should be into your head, and you need to be very strong with the basics to be able to solve this chapter. In exam, even if you practice 1000 sums, there will be a one new sum which comes and you will get stuck over there. How to solve this chapter easily? First step is to understand the requirement in the question. What are they asking? What values do they need? Using that information, you have to open all the accounts which can be created with the information. Let's say there is details relating to debtors, bills, receivables, cash, bank. Then you will open your debtors account, cash and bank account, bills receivable account, creditors account, etc. Second step, after opening templates for all the accounts along with your P&L and balance sheet if it is required, second step is to take information, take each transaction and start posting the information in the above accounts. In the entire question, post every transaction in the above accounts. Third step, once you finish posting all the transactions given in the question, you have to start closing these accounts. Once you start closing this account, you will find some missing figures which will give you new information. For example, in debtors, if they do not give you what is the amount of credit sales, if you post the opening balance, closing balance and collections for the year, you will find what is the credit sales. Similarly, for all the accounts, you have to close them and find information. The question will be structured in such a way that once you close all the accounts, you will have enough information to prepare your trading and P&L account and balance sheet. The flow of which account to close first, you will get out of practice when you solve more sums. We will be solving more sums in the live class to get a control over this chapter. Thank you.